Hey guys, welcome to the Average Car Guy. And so today I want to talk to you guys about buying or leasing cars because I've been on a couple forums recently where this question comes up whether or not you should buy or you should lease. Mainly on the Jeep Gladiator forum, there was this huge discussion over this, and it just there's a lot of ignorance, I think, around like what buying or leasing is. A lot of it comes probably from your parents telling you should never lease or you should whatever do it not. So I'm here to tell you you shouldn't believe what you hear, okay? Because there's a lot of factors involved, and in some cases you really should buy, and in some cases you really should lease, and it just depends on what your situation is and how many of these check boxes you would apply to you. So I put together a quick list together. Hopefully, you guys can see this, and the font's big enough. But so basically, let's talk about the basics. And I'm going to go back and forth between the couple of these slides because I didn't want to create a slide for everything. But we're going to talk about the basic concepts, like what is leasing, what is buying, and then how often you basically get in and out of new cars, how many miles you normally drive, brand loyalty. The real depreciation that's associated with the vehicle you want to drive. So like this is kind of a subjective thing, but we'll come back to it. Um, ICE versus electric. This is a big deal right now, as and we're in 2019, and we're in the precipice of a lot of that stuff happening. What happens in case of an accident or damage to the car? And also in that same category, what happens if you want to mod the car, right? So we'll talk about that. That's not really on my list here, but we'll talk about it. Your tax situation, we'll really get into that one. Sales tax in your state, and just a general discussion around debt and your viewpoints on it, and how much disposable income you have. Okay, so let's talk about just the basics of leasing though first, and financing. So let's just talk about a normal $50,000 car. Okay, now financing is when you get a loan for the full value of the car minus what you were willing to put down. So let's say it's a $50,000 car, and let's say you put no money down, you're basically financing $50,000 of that car. Okay, and whatever interest rate you get, let's say your credit is good and you get like 3% interest or something like that. Again, in 2019, where we are right now, that's a decent rate. Banks are offering. You can go as low as 2%, I guess. And just a few years ago, they were offering 0% financing because interest rates were so low. So it just depends on the time. So whatever year you're watching this, that number may sound too high or sound too low, but that's not really the point because money factors and leases, which is what we'll talk about next, kind of follow that same pattern of interest rates. So that really shouldn't come into play. And then, so when you purchase a vehicle, depending on the state that you're in, if you're in our lovely state of California, you'll end up paying sales tax depending on wherever you're buying it from. So here in Orange County, you'd pay, I think, 8.75% or something like that of sales tax. Don't quote me on that. LA is a little different. San Diego is a little different, and certainly other states are very different. Some states you don't pay any sales tax. So I believe in Washington State you don't pay any sales tax. So that can make a big difference in whether or not you buy or lease, depending on the amount the car costs. And also, it kind of along the same lines when it comes to the government, it depends whether or not you're the city, state, county that you're in wants to charge you additional fees. Like in California, we pay quite a bit of fees for registering a vehicle and things like that. So that may or may not come into play, but that sort of stuff typically pans out to be about the same for financing or leasing. And then but then you end up paying in a financing situation. You end up having to pay that full $50,000 to the bank eventually, plus interest. Okay, but in a lease situation, you're essentially still getting a loan from a bank, but you're getting it for the depreciation amount. Okay, so let's just work with an example. That $50,000 vehicle, the bank will determine how much that vehicle is likely to be worth in 3 years. So in this case of this example, the banks determined that the vehicle is only worth $30,000 in 3 years. So it's depreciated 20 grand. So they're essentially financing a loan for you for that $20,000 depreciation. It's not going to be as good a deal on the interest rate probably, and the calculation varies a little bit, but you're essentially more or less uh, financing just that depreciation percentage, and you owe them those monthly payments, and then you owe them the car back at the end of the 3 years. So a lot of people wrongfully refer to this as renting the car. Okay. You're not renting the car. Okay. This is basically just another financing tool. They're both forms of debt. If you go to your credit report, you have that show up. Financing or leasing, they both show up on your credit report as an outstanding liability for the amount that is being considered here. Okay, so don't get it wrong. You're not renting the vehicle. I'm sick and tired of hearing people say, "Oh, leasing, you're just renting the vehicle." Yeah, well, financing, you're just renting the vehicle too. It's not yours. It's not yours until the bank says it is. So it doesn't make a difference. But in the case of financing, I'm sorry, in the case of leasing, another nice thing, other than the fact that you're only paying for the depreciation, is that you're only paying for the tax on the depreciation. Versus on the first scenario, you pay taxes on $50,000. The tax is divided up so that you're only paying it on that 20 grand for the time that you have it. Okay. So if you end up giving the car back in 3 years, you didn't pay the full tax on the $50,000. Now, in the state of California, you pay that $50,000 tax. When you sell the vehicle, the next guy who buys it from you, probably for $30,000, he'll pay another sales tax on $30,000 to the state of California. That car could change hands 10 times and collect sales tax in California 10 times, which is something for another podcast or discussion. Anyway, so those are the differences between financing and leasing. Don't get it wrong. You're not renting the car in either of those scenarios. It's just in one of the scenarios, you're only paying for the depreciation. In the other one, you're paying for financing. So you ask yourself, so why would I ever buy? Why would I ever lease? Yeah, good questions. So it depends on a lot of different factors. It certainly doesn't depend on the factor we just went over. Okay. It depends on all these different things. So let's talk about the first thing. How often and how many miles? By how often, I mean, how often do you see yourself getting into a new car? If you're a guy like me, I like to be in a new car once a year. Okay. So at most once every 3 years, because I'm a car guy. I like trying out new cars, and I like, I spend a lot of money on it, and I lose a lot of money on cars over time, but it's something I've made a priority for myself. I enjoy doing it, so no judgments. And Judgments aside, I know some of you will judge, but judgments aside, I like to get in a car every 1 to 3 years. Okay. Now, if you're doing that, you got to lease. Okay. Because the depreciation of walking out of the dealership is right off the top. Like the minute you drive a car off the dealer lot, you're losing 10 grand right there. Now, some of you might ask, well, you're an idiot because I only buy used. Well, you're very smart. Okay. I don't like buying used just because I like to have the newest thing on the market as soon as it comes out. So just to give you an idea, this discussion sprouted from a Jeep Gladiator firm, but that's a 2020 Jeep Gladiator. I have one on order. It's a car that hasn't even come out yet. I usually own the cars that I own. This is their first year of production. I like to try out new things. The next car I have on order is a Rivian. And as soon as that's available, I'll take delivery of it. So the used thing isn't available to me. So this discussion is really for people who like being in new cars. You can't really lease used cars. Some of you might say you can't, but you really can't. Okay, those are schemes, okay, that are out there, and you really shouldn't look at them. Leasing a used car really doesn't pan out. So this discussion is really only for new off the lot cars with, less than 20 miles on them. Okay. Anyway, so another discussion here, though. So if you're thinking keeping the car 5 to 10 years, that's just financing. There's no lease term, 5 to 10 year lease term out there. And if there is, again, it's another kind of formal way of ripping you off, or it's a financial ploy that you could work out for your own tax reasons. But I won't get into that. I'm not a CPA, and I won't give you tax advice. Now, the other factor here, though, is how many miles you drive. If you come to me and say, Tan, I drive, 25,000 miles a year. And a lot of people down here in LA do. Well, if you do that, you really shouldn't lease because you'll get screwed on your lease. Leasing companies, they charge you a monthly fee to lease you the car, but you're limited to driving it, 10, 12, 15,000 miles a year, something that's predefined. If you go over those miles, you get charged per mile. Now, it could be as little as 25 cents a mile, which would be a pretty good deal depending on the car, or it could be as high as $3.50 a mile if you're driving like a supercar. Okay. So you got to weigh which one works for you. But if you ask me, if you're driving more than 15,000 miles a year, and you're going to keep the car 5 to 10 years, you got to go with the financing route. There's really, that's pretty cut and dry. But otherwise, you got to stay with leases. There is an exception, okay, and I'll go over it. And that is this exception here around brand loyalty, okay? If you feel like you're going to be loyal to one brand, you can kind of forget about the whole mileage thing. And here's why. My wife was into Mercedes for the longest time. We're now into she now drives a Land Rover, but Mercedes and most companies, in fact, I think all of them have this deal where if you lease a car from them and you go over your miles by no matter how much, if you're leasing another car from that brand at the end of your lease term, they'll just drop all those charges. Okay. Now that's something you may have to negotiate, and it may not be available to you. I don't know. But most of them will cut that deal for you. So if you're only supposed to drive 10,000 miles a year in the 36 months, and you come back in 36 months and you say, look, man, I drove 45,000 miles. They'll say, well, I'll tell you what, if you lease another car from me, we'll look the other way. So that becomes a non-issue, but it only applies if you're staying strong with the brand. I'm not known to do that. Okay. I'll stay with the brand for a little while, couple of years, couple of turns, like a couple of different cars. And then I like to try different things. So to me, that sometimes is an option. Sometimes it isn't. So you have to decide if you're a Mercedes guy or BMW guy or a, Acura guy or I don't know, Lexus guy, and you think you're going to stay with that brand for life. And I know there's a lot of you car guys out there that just are the Jeep guys, for example. They'll you cut them, they'll bleed Jeep. So for them, it may not be an issue to do that. So you'll want to consider the brand loyalty when it comes to your miles. But certainly, if you're the kind of guy that likes to keep a car for 10 years or so, which is a great idea, by the way, I think that's a better financial decision overall. If we don't consider anything else, that on its own is a good financial decision. Also is buying used. If you're buying used and keeping for, 5 to 10 plus years, yeah, buying makes a lot of sense. But if you're a car guy and you got to be in a new thing, if you like that variety, then no. Anyway, we'll move past brand loyalty real quick. We'll get to the concept of real depreciation. Okay, what does this refer to? All right. And actually has to do with this next topic, the ICE versus electric too. Here's the thing, guys. When you go to lease a new car, okay, they will tell you what the residual value will be at the end of the lease. Okay, the residual value is what the manufacturer and the banker and those guys have all decided is what that car will be worth at the end of the term of the lease if if you've driven it less than the miles that you're capped at. Okay, so if you said you're going to drive it 10,000 miles a year for 36 months, they like to measure in months. So if you bring it back at the end of the 3 years and let's say you got 29,000 miles, they think, okay, we're going to decide ahead of time that the residual value will be X percent. Usually, I don't know, it's around 70%, something like that, right? But you are probably a little smarter than that. You know this brand, you know this car, you've been researching it. You know whether or not this car is going to be worth more or less at the end of that time. So you should be educated enough, okay, that you'll know that. Now, it's not obvious. It's not always obvious, right? But a lot of times it is, okay? So a lot of us car guys, we know if a car is going to be worth more or less. The cars I buy are almost always worth a lot less than the manufacturer thinks it's going to be worth in 3 years. Okay. So my NSX, for example, it's a 2018 NSX. The manufacturer thinks it's going to be worth 90 something $1,000 in 2021. Okay. I know for a fact it's going to be worth a little less than that. So I'm happy that they say that because they're only charging me for the depreciated amount. Okay. But there's other manufacturers that get it wrong the other way. So depending on the way you go, you might want to decide a lease or a finance. Okay, so which end of that equation do you want to be on? If the manufacturer and the leasing company, which sometimes is the same, like the for example, Acura, where I have leased my vehicle from, has another company. It's a financial body called Acura Financial. Okay. It isn't Acura, the manufacturer. It's some finance company that they spun up so that they could finance their own vehicles and they could lease their own vehicles out. So I feel like they got that wrong. Right. And I'm pretty confident I'm right. So I'm only paying for the depreciation. I'm very happy that I don't own the car at the end of the year, at the end of the time, end of that term. But if I'm wrong, what's nice about a lease is that if I'm wrong, I get the option to buy it at 90 something $1,000 at that time. I can just pay that money and keep the car, right? So that's what happens at the end of the lease. I can keep the car. And I have multiple cars, so I don't end up really ever hitting my miles because I don't put all the miles on one car. So there it is. The last thing on this side of the equation, on the left side of my arguments for leasing versus buying, is ICE versus electric. We're living in a very peculiar time right now. There's a huge shift towards electric cars, and I think it's only going to get bigger and bigger. So my view on this is ICE cars. ICE stands for internal combustion engine, right? So ICE vehicles, which are traditional gas guzzling, or diesel vehicles, are on their way out. And I think that is a very true thing. I think if you're arguing on that point, you're living under a rock. And I think what's going to happen is you're going to see a lot of hybrid drive vehicles, even in the supercar category. You're starting to see that. So the NSX was the first one to really do that in a mass market way. And you're going to see that across the board in a lot of areas. Okay, so I think every car brand is going to switch their vehicles over to an electric drive. Even Jeep will do that. And we're seeing Range Rover come up with something like that. So, I mean, even these big SUVs that are meant for off-road, you're going to see them switch. So what will that do to the value of your ICE vehicle over the next 3 years? You have to consider that. You have to consider that because that is a big factor right here where we're living in 2019. If you're leasing a vehicle today, you have to know that in 3 years, with increasing gas prices and ubiquitous charging stations and just the world's move towards cheaper, better, and longer range electric vehicles, you gotta know that gas vehicles, ICE vehicles, are going to take a huge hit on value, much bigger than what the manufacturer is residualizing them at today. Making leases a much better idea, okay? But there's a big caveat here. That doesn't mean you should go buy electric vehicles. It's even more so of a case with electric vehicles because they're becoming outdated so much faster. The newer generation of these things is kicking the butt of the model from last year. Every year they seem to add like a 50 to 100-mile range to each one of these things. So don't fall for that. I would say leasing right now makes more sense than it ever has in the past. Okay, if you drive the right number of miles, especially if you have the brand loyalty built in, and especially if you're the kind of person that drives less and less miles per year. Okay, so we covered the left side. The right side is a little bit of things you probably didn't even think about. Okay, so in addition to the accidents and damage, I'm gonna add modifications to this list. Okay, so accidents and damage. Okay, guys. So if you get in a car accident that totals your car, let's say, and you finance the vehicle, well, guess what? Let's say it all but totals the car, right? So it's like $30,000 worth of damage to the car. Insurance company pays and fixes it, and they give you back that car. Well, that sucks because unless you fight really hard, you're not going to get that loss value from your car unless it's a super high end car. You go get a lawyer and get the insurance company to do that. You're not going to get that back. On a lease vehicle, you could give a shit, right? You got gap coverage on your insurance that's going to make everybody whole. And in a lease vehicle, they're much likely to take it back. And even if not, you got it for what, another year or two, and then you give it back and it's out of your hair. You didn't lose any money there. So that's one thing. But big but here, and I like big butts. The modification angle is a little different. You can't really get in there and modify the hell out of a leased vehicle and expect the dealer to be cool with that when you return it. Now, in a lot of cases, they're okay with it. If you're upgrading the wheels, yeah, it's fine, right? If you put a 2-inch lift kit on your Jeep, yeah, it's fine. And remember, you can remove all the mods, put the old ones back on, and then return the car as it was. Perfect. But if you're the kind of guy that likes to cut up freaking panels and do engine swaps or add superchargers and shit like that, no, do not do that with a leased vehicle. In fact, don't even do that with a brand new vehicle. Go buy a used vehicle, tear it to hell. But to each his own. I'm just saying, if you're the kind of guy that does a lot of mods, and they're heavy mods, maybe leasing isn't for you. So that's a big one. But this next point I'm about to make, I want to warn you. I'm not very good at taxes, okay, and I'm certainly not an accountant. I'm not giving you tax advice. This is something you should go discuss with your CPA. But leasing versus buying does depend on your tax situation. When you buy something versus when you lease something, the financial implications of your taxes are different. Now, this only applies really to those of you out there who have non W-2 income. Okay, so if you own a business, or if you're getting some sort of 1099 income, or some other way of earning money, maybe maybe most of your income comes from capital gains of some kind or whatever, and you've got a vehicle that you can use as a deduction towards your business. Okay, now the problem with owning a vehicle is you can only write off the depreciation amount per year, okay, on that vehicle. So if you bought a $50,000 vehicle, there's a depreciation schedule on that, and you can depreciate it. But when you sell it, if you get some of that money back, you got to recoup that depreciation, and then you pay taxes on that again. Okay, so to me, leasing is a much better deal if you own a business, because you can pretty much write off the entirety of that lease for the amount that, this is very important, for the amount that you use it for business. Okay, you can't use it for personal use and then write it off against your business. That is a huge no-no. I don't advise you do that. I don't want to see you in jail, right? But leasing is a little easier because, look, the lease is for the amount that the car depreciated. It is built into the nature of the lease, which basically means the amount of the lease that you used for your business is fully write off. So if you have a car that you lease for your business use only 100%, and let's say you pay $500 a month for that, well, you can deduct that $500 a month as an expense off your lease, off your business income, okay? Because it's being 100% used for business. But let's say you only use it 50% for business, but 50% for your personal use, which is a much more likely scenario. So I don't recommend claiming the first thing, but claiming the second thing, 50-50. That means $250 of that per month you can write off. What does that mean? How is that relevant? Well, if you're like me, you pay about 50%, actually a little more, of your income towards taxes. Okay, so of that 250 that you claimed, 125 goes right back in your pocket, making lease a lot more attractive. I'm not going to get any more into it. Talk to your accountant, but look it up. So lease isn't as stupid a deal now, or all of a sudden, as you thought it was, right? Let's move to this next point. Sales tax in your state. We kind of brought it up already. I live in California. I'm going to pay like 8 or 9% for sales tax. If you live in a place that doesn't have that, that could make the difference between whether or not you care about the lease. But again, should be a pretty obvious point. And I just want to talk about debt a little bit. Okay, people are so allergic to this idea of debt, and it kind of comes with this next concept of how much disposable income you have. A lot of you, no, a lot of you might have money, right? But you've got better things to do with your money. Okay, I know guys that go and leverage themselves as much as they can, so they can buy as much real estate as they can, so they can collect rental income. Okay, if you're that kind of guy, you don't have a whole lot of loose cash lying. Even though you've got high income potential and you got a high net worth, you don't have a whole lot of loose cash lying around to throw at a nice fancy car. Okay, and let's say you got discerning taste and you're a car guy and you want to drive a fancy car in addition to your real estate habit, right? Which describes me pretty well, right? Um, if I don't want to throw all my cash at a car, leasing would be a great option because I get to drive that nice fancy car at a much lower monthly payment, okay, and just pay for the depreciation, not tying up all my cash, okay? So that's one thing. But then, like, you got to also consider debt. A lot of people think, like, leasing a car or buying a new car is this giant mistake and you shouldn't do it because it's such a waste of your money. But then they turn around and they buy this big fancy house, right? Their primary residence, and they think that's just like the best investment. Whereas to me, your primary residence is one of your worst investments you're going to make. Real estate is a great investment. Your primary residence, like, hey man, you just need a place to live. That's not going to make you any money. But people are willing to over leverage the hell out of themselves to do that. Okay, to each his own. I'm not here to judge you. I'm just letting you know you got to develop a better relationship with your finances and with how you handle debt and with how you handle these conversations around leasing and financing. And you got to be realistic. You got to consider everything, all of these points, and consider the fact that financing and leasing are just both forms of borrowing money. Okay, so don't fool yourself into thinking something else. And that mortgage you got, that's just another way of borrowing money, right, from a bank. You don't own that house. The bank owns that house, right? Now, if you got a rental property where you leverage the bank's money so you can make money a rental, good for you, right? You figured out how to use financing to your advantage, okay? These other things, they're just tools to let you have the nice things that you can't afford ahead of the schedule that you're supposed to have them, right? But don't fool yourself. They're both great options if you're trying to get into a new car. Uh, they're both terrible options if you're trying to get into a used car. But well, maybe financing isn't so bad if you're trying to get into a used car. I think that's the only option you really have. But don't forget some of the things we talked about today. I really want you to give a long, hard think to the ICE versus electric discussion when we're here in 2019. I really want you to consider your tax situation. Okay, if you're a business owner, you really need to consider this. And in my eyes, the more expensive that car is, the better. Really, the more you spend on it, the more the better your number will look at the end of the day. I'm not saying go waste your money, but certainly enjoy yourself, enjoy your car habit. If you're into cars, if you're not into cars, don't waste your money. Jesus, I know some guys that couldn't give a shit if they drive like a beat up Toyota truck or a brand new souped up Range Rover, right? They couldn't care less. They're just getting from A to B. I envy those guys. To be honest with you, I envy those guys. But this is my hobby. This is what I like to do. I like to be in a nice new car all the time, and leasing is a real nice way of getting me into it. Now, you're probably going to ask me, so Tanner, you're going to buy the the Gladiator, or are you going to lease it? I don't know. I don't know yet. It depends on the lease term they offer me, right? If they offer me some shit lease term, then no, I'm going to purchase it, right? But if they offer me a good lease term, I'm going to take it because I don't drive very many miles. So that does depend on that too. Be careful that your dealer that you're buying from doesn't try to shove you some shit lease term. It kind of depends on how much money you got in your pocket to put down on a car. I happen to have some money from selling my Range Rover Sport SVR. So I took that money and I set it aside for this Gladiator. So if the lease thing doesn't work out, I can more or less kind of buy it in cash. So again, consider your financial situation. Don't make judgments based on you know things you heard from your parents or something you read that, oh, leasing is for suckers. That Don't do that to yourself. Become educated in something, and enjoy driving your cars. Hope you enjoyed this video. I'd love to hear all your comments. I think that there's a bigger discussion around all of this when it comes to ICE vehicles, when it comes to financing terms, and when it also comes to new methods of owning and leasing a car. There's a lot of companies that are letting you ride share cars now. There's a lot of companies that are letting you just like have a car for a year and give it back. And there's all kinds of weird, like Volvo, I heard, is doing something crazy like that. I think there's a lot of cool stuff happening in this space, and I'd love to have a discussion with you guys about it. So you comment below, and if I do a follow up, it'll probably be based on the comments that you make. I'd love to do a follow up video to this. So click the subscribe button so that you'll be notified about that. Thanks again, guys, for watching. I hope you're having a good day, and I hope that you're enjoying this video, and I hope that you learned something, and I hope to see you again next time.